and more importantly, helping you make decisions on your business based off the numbers rather than how you feel, right? Because we know this, it's different, okay? So let's kind of walk through, I don't know, let's kind of walk you through this, okay? Real life examples, but let's do this kind of in an engaging way, okay? So journal entries. Think of them like, again, the building blocks of accounting, like little Legos, okay? So think of a journal entry as like logging a transaction in your checkbook, okay? It just it records what happens to your money and where it goes. So this is basically, we put a journal entry into your software, your ledger, whatever it is, the spreadsheet, okay? But it's just the description of the transaction, okay? So remember this, every financial transaction affects at least 2 different accounts, okay? And so one of those increases while another one decreases. It's like on a sliding scale, okay? And you always hear us talk about it called double entry accounting, okay? Double entry accounting, right? One goes down while one goes up, right? So when we do the journal entries that affects at least 2 of these accounts, okay, double entry accounting. And it's really, think of like left and right side, okay? And the left side would be like a debit, okay? So we have a debit that increases the assets and expenses, and then a credit on the right-hand side that increases your liabilities, your revenue, and your equity, okay? So I know you're like, oh my gosh, dude, you just lost me, right? Okay, but here's an example, okay? So we talked about before, you bought a laptop for your business and it costs $1,000, okay? And you use cash, okay? But here's how it looks on a journal entry. So if we're talking like a spreadsheet, okay? And it could literally be this simple, by the way. Date, okay? The account, the debit, and then the credit, okay? So the date, the account, the debit, and the credit, okay? So here's what would happen. You would basically, when it comes to date, we'd basically say January 1st, okay? And you would basically have 2 transactions. Okay, so remember we talked about double entry is the top, there's 2 transactions. Okay, let's just say on January 1st, you bought a $1,000 laptop with cash. Great. First transaction, okay, is the debit, and the second transaction is the credit.